Ladies and gentlemen, Greg McCloskey from ForexLive.com. Now that Chair Powell has gone through his speech and question and answer at the Brookings Institute, what is the summary? What are the technicals saying? What are the risk and bias levels doing? What are other markets doing as well? So before we get into the technicals, it seems like Fed Powell said the right words that the market wanted to hear. In particular, they wanted to hear the word soft landing, and that's what they got. They got the word soft landing on a number of occasions, and soft landing implies that the unemployment rate is not going to go too high, or not going to let it go too high, that we might have low inflation start to come down, the Fed start to ease their way into not hiking, so on and so forth. That leads to a nice little soft landing, almost like falling on a bed of pillows. And so that's a good feeling. And what we saw was things like the dollar move lower, which is good for the stocks. We saw the stocks move higher because the dollar moved lower. We saw interest rates move lower because the dollar moved lower. We saw stocks move higher because interest rates were lower. All these things started to pile on. And we're currently seeing like 2-year yields down 8 basis points. We're seeing 10-year yields down 5 basis points. So some moves, and these yields were up higher earlier in the day. So a big swing around in the interest rate market and the stock market as well, moving sharply to the upside with the 200-day moving average being approached in the S&P index at 200-day moving average currently comes in at the 40-50 level, and we're just moving above that level as we speak. The 200-day moving average comes 40, 50, 17, and the S&P is trading at 40, 53 right now. So above the 200-day moving average, that's the first time since April. So good news on the stock market, and that could lead to other markets moving in the trends that we're seeing. So let's take a look at some of the charts in the Forex market. We'll start with the Euro versus US dollar. This is the hourly chart of that currency pair. And what we're seeing is that the price, honestly, has been in this range here for quite a bit of time here. And we saw the move to the upside here. We saw the move to the downside. We saw the move to the upside. We saw the move to the downside. Now we're seeing a move back to the upside without going down to the lower extreme here. We came down to this upper lower extreme, if you will, through here, where we have a number of different swing levels coming in here, and that's where the market bottomed in trading here today before moving to the upside. In between this extreme on the top side and this extreme on the downside within this box is the 100 and 200 hour moving average, and also the 200-day moving average, and moving above those levels tilted the bias more to the upside. Now, we did move above it earlier today. We sort of moved above it a little bit on yesterday's trade, and on Monday we moved above that level and moved all the way up to new highs as well. So there is room for a rotation back to the downside, but what we have to do as traders, we have to use these levels as our guides for bias, and indeed the bias above the 200-day moving average and the 100-hour moving average, and above the 200-hour moving average here is more bullish. And so we have to believe in that and hope that the market is going to use this as a springboard toward perhaps going through there. But those are our targets, and we need to get through those levels. And if we get through those levels, then all is well with the world. And what we don't want to see is a move back below the moving averages. So that's our risk-defining level. So that's what the euro's looking like, looking more bullish above the moving averages. Let's take a look at the dollar versus yen. And the dollar versus yen is the opposite of the euro versus US dollar, because dollar is a base currency in this case. And so we're seeing the dollar move to the downside here. We did move above the 200-hour moving average earlier in the day, and that was somewhat bullish. But the bullishness could not be sustained, and you can see here that the market started to use that 200-hour moving average as resistance before the Fed chairman start to speak and sent the price to the downside. The low prices for the month of November, right through here and here, need to be broken in order to push the market further to the downside. If we take a look at the daily chart in the dollar versus yen to see where these levels are lining up, they line up just above the 38.2% retracement. Maybe not just above, but with the 38.2% retracement in mind. On the downside, that level comes in at 137.24, and we're going to ultimately need to get below the 38.2% retracement and stay below that level to keep the sellers more in control and taking more control, because in 2022, the dollar yen was the high flyer. We moved all the way from this low up here to this high right here. That was from about 113 to 151. That's 38 big figures to the upside. Big, huge percentage move to the upside. And now we're seeing the price move down and just getting back to the 38.2% retracement. That is a minimum retracement target that we need to get to and through if the sellers are going to be taken seriously. Otherwise, this is just a correction of this. So we need to get below the 38.2% retracement. Keep that level in mind going forward. That's what they're focused on. That's what traders will be focused on going forward. Let's see. Take a look at the sterling versus U.S. dollar. And like the euro versus U.S. dollar, it too has been in a range through here. Now we can probably dissect this and say like that's a range right here, and this is a range through here. So we have two ranges, one here and then another one at the top or upper extreme here. But what we're seeing here, which is similar to the euro versus U.S. dollar, is a move above the 100-hour moving average. That's the blue line right here, and also what we saw move back above the 200-hour moving average right here. Don't have a daily chart until daily moving average until up here, so that becomes our big target on the top side, which also corresponds with the high price from over here. So this target right here near the 100-day moving average, and the top price right here through the month of November, it comes in near that 121.526 level. Now on the sterling versus U.S. dollar, let's take a look at the daily chart. And what we know about the daily chart is a 50% retracement of the 2022 trading range from this high right here to this low right through here, comes in at the 120.49.9 level, so the 1.2050. We're moving just above that level as we type, so we're 23 pips above it now. So that's more bullish, and with the 200-day moving average and the high price from earlier this week or last week, now is a big key target at 121.58. So watch the 50% retracement now as support for the sterling versus U.S. dollar. If we're able to stay above that level, that's good news for that currency pair. The dollar versus Swiss franc is moving to the downside. We saw the like the other currency pairs with the 100 and 200-hour moving average in play, and up and down price action over the last few weeks of trading. So markets are looking for a break, but the first break comes on the break of the 100 and 200-hour moving averages, and those become our risk-defining levels in the new trading day. As long as the price can remain below those moving averages, the bias remains to the downside, with hopes of getting down to our low prices that we saw in the month of November for this currency pair. So watch the 0.9476 level as close resistance here for the dollar versus Swiss in the new trading day. Get below that, stay below that level, the bears remain more in control. Dollar versus Canada next. We take a look at this currency pair. Boy, what a couple days in this currency pair. We saw the market move sharply to the upside yesterday. This was off the back of mergers and acquisitions news. RBC out of Canada was buying HSBC's Canada branches from their U.S. company, so they need to buy dollars in order to pay HSBC for the RBC branches, and that led to the sharp move to the upside in the dollar versus Canada. And in today's trading, we're seeing the rotation back to the downside, retracing nearly all the move to the upside here. The 100 and 200-hour moving averages have not been broken. We're trading in between them, but if we're able to get below the 200-hour moving average, that would increase the bearish bias here and keep for the dollar versus Canada. So that's how that currency pair is looking. And finally, let's take a look at the Aussie versus U.S. dollar. And if we look at that chart, we are now testing the high price going back to November. If we look at the daily chart, this is what it looks like on that chart with the next key target coming against this swing area. This swing area comes between the 0.6828 and 0.6859 level. The levels defined by different swing lows through here, and then we started to use it, trade below that level, and then reestablish it as support through here, and then go back below it through here before having the last failure and moving to the downside right here. Now we're hoping to get to and through that level on our way to the 50% retracement and 200-day moving average on the top side. So there you have it. A look at some of the major currency pairs. Taking a big strong look around all the major currency pairs after the Fed Powell speech. We're seeing the S&P now up around 97 points, or 2.47%. The Nasdaq index is a big gainer, nearly up 400 points, or 3.59%, and the Dow Industrial Average is up 1.6%. Happy days are here again. Soft landing. Gotta love it. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.